REIT stands for Real Estate Investment Trust. The concept of REITs originated in the United States when President Eisenhower signed the REIT Act title into law as part of the cigar excise tax extension of 1960. The U.S. Congress had originally created the right to provide U.S. investors with the opportunity to invest in and profit from diversified, large-scale professionally managed portfolios of U.S. real estate.
REITs allow anyone to invest in portfolios of real estate assets the same way they invest in other industries, through the purchase of individual company stock or through a mutual fund or exchange-traded fund, ETF. The stockholders of a REIT earn a share of the income produced, without actually having to go out and buy, manage or finance property.
REITs are similar to mutual funds as they allow multiple investors to pool their investments, and in both cases, the assets are professionally managed by a designated manager. But, while the underlying asset of mutual funds is usually equity, debt, gold, or a combination of these, the underlying asset in the case of REITs is primarily real estate holdings or loans secured by real estate.
REITs historically have delivered competitive total returns, based on high, steady dividend income and long-term capital appreciation. Their comparatively low correlation with other assets also makes them an excellent portfolio diversifier that can help reduce overall portfolio risk and increase returns. These are the characteristics of REIT-based real estate investment.
An investor can invest as low as 2 lakh rupees in REIT. REITs allow investors to invest in and profit from commercial real estate which is not otherwise easily accessible to small retail investors.
An individual may buy shares in a REIT, which is listed on major stock exchanges, just like any other public stock. Investors may also purchase shares in a REIT mutual fund or exchange-traded fund, ETF.
In India, the concept of real estate investment trust is relatively new, and the first guidelines were introduced by SEBI, Securities Exchange Board of India, in 2007. The current SEBI guidelines related to REITs in India were approved in September 2014. There are currently only 3 REITs available for investment in India: Embassy Office Parks REIT, Mindspace Business Parks REIT, and Brookfield India Real Estate Trust. Going forward, other leading names in the real estate sector like DLF and Godrej are also expected to introduce REITs.
Besides all the things mentioned above, there are backdrops as well, such as: first, there are only a few options available, and hence limiting the investor's choices. Second, though REITs trade on the stock market, the number of active retail participation is low. Therefore, liquidating REIT investments can be challenging in times of emergencies. Third, the interest or dividend income from REITs is entirely taxable in the hands of the investor. This income will be a part of the taxable income, and it will be taxable as per the applicable tax rates. To conclude, globally things are slowly getting back to normal. Offices in USA and rest of Asia have started recording increase in attendances where a large part of population has been vaccinated. India, however, is in a pause mode. Occupiers continue to delay the new deals unless driven by immediate business need. REITs have been largely resilient in the last 1.5 years. Most of them have restructured their debt, raised capital and strengthened their balance sheet. Indian REITs have successfully navigated COVID till now. We can't rule out the short-term weakness in this sector. At the same time, writing obituaries for India REITs is unwarranted. The long-term story for office spaces commercial real estate continue to remain strong in its new form. At last, here is a structure of how a REIT works. Thanks for watching the video. Please like and share my video and subscribe to my channel for more detailed videos. You can reach us at Instagram or Facebook by the name Stock Market REIT. You can also reach us at Twitter by the name Stock REIT. Please follow us on all the platforms to remain updated about all the content.